Good evening. This is the Elliott wave update for the NASDAQ 100 and the S&P 500 for Monday, June 12th, 2023. It was a wild and crazy day again today, and not that I did not anticipate it, and a lot of that would have been based on the news and then the additional news that came out over the weekend about, well, it's official, we're in a bull market, and gee, this, and that. And so I had anticipated that there would be a large influx of buyers again today as the markets continue to try to factor in what's coming, what they feel is happening, et cetera, et cetera. And that's pretty much what did play out. Now, what it does bring about is yet additional extensions. And that's what I'm going to talk about here. So again, I'm going to keep this to a technical picture. Because that is actually what the markets are basically trading technically, and whether they want to base it on perception of what the Fed's going to do, what they believe the CPI and the PPI will come out tomorrow and say, et cetera, et cetera. I'm going to present a technical picture. The rest is going to happen and the markets react as they will. Now, I have been continuing to count what I believe is a five-wave move up off of the March lows. So the March 12th low continues to be a five-wave structure based, but of a minor degree. And that minor third wave has been stupendous to not to downgrade it at all. It has just been an incredibly extending third within it. And going back and just reviewing what Elliott often talked about as that third waves are most often the longest and the strongest and contain a large extension within it, and that happened within this third wave. And so as the market continued to pull back slightly, go up, pull back slightly, and continue to rally without actually pulling down to put in what would be a more acceptable minor fourth wave, it just continues to bring about a situation where that minor third is continuing to extend. I do believe that we are inside the minute fifth of this minor three, and that was an alternate. I didn't necessarily discuss it, but I left open that potential that we were going to continue to just fly higher, and then that would cause some rearranging of the labeling. Now, I know a lot of people really find fault with that, but again, I just want to state that it is not me that gets to tell the market what it's doing or what it needs to do. The market will always tell us what it is doing and what that path will be. So being that this whole count is fluid and in motion, leaves me in a position where I need to make my updates based on what the market is telling me. Now, I have been discussing and using fibs and showing the strong potential that the market was going to move above 15,000. That has now occurred. And as we can see, they initially started like they were going to try to pull down a little bit. That's off the table. They're now moving up again, deeper in to the 15,000 plus. So let's take a look at what comes next. As we can see, if I bring this back down to the hourly chart now, what can we look for in this minute fifth wave? And what, again, the extensions come from are we compare minute fifth to minute wave one, and then that's where these fib extensions are running all the way here. But because of the length of that third wave, I have to go to the 4-hour chart to show you where that minute wave one is. Still in pretty much the same place with wave two. It was this third that just extended and continued to extend. So showing those extensions now, we'll go back down to the hourly chart. So the first up that when we're looking at it is equality. That would be the most common relationship on a Fibonacci basis between waves 5 and wave 1, in this case on a minute degree, and that's at 15,101.75. That's our next resistance level. Now that we've kind of got past 0.786 and 0.750, both of those were blasted through early in the session. And this came early, and then we continued to climb. In fact, even if I can just move this up so we can see the depth, it just was very steep, very strong, and everybody just piling back in. But again, it truly was not broad-based. It was Apple, it was AMET, it was AMD, Amazon, a little bit of Google, Metaverse, Microsoft. It is the usual suspects, NVIDIA. So we have a group of 7 to 12 stocks out of 102. So breadth was not all that strong. Volatility, and I have it here on my, VXN, volatility in the index for being up. The NASDAQ, the NDX was up 255 points. So was volatility. Volatility went up. Those are two things that don't normally go together. You would suspect that with the market making such a strong move up, the volatility would have dropped 1.5. It went up 1.5. The VIX rose today. Now it's showing some decline, but it rose today. So again, those two factors don't tend to bode well for a strong market, and usually will lead to some form of a pullback. So again, I can't say that the market won't end its here and will start then to roll back, moving this 5 down. And so in which case, I've left them up there because of course we're looking for that completion point, but I would bring that into play and then bring the 3rd down as well. Let's just bring it down inside the picture, which would then possibly drive us back into that 4th wave, that minor 4th wave that I continue to look for to finish this very strong, very powerful C wave. Now, again, as I talked about yesterday, I will begin again today, and even on a technical basis, I cannot put down or put out of the picture that some of the alternate views, one of them being that I talked about yesterday and will bring up again today, that this rally does carry the NASDAQ up and into including at least a run towards that 16,787 level, which is the all-time high. And I'm just going to take a peek out here because what we've got going on, we surpassed 618. So I took away a lot of the additional in between these moves because they are not valid anymore. So once we surpassed 618, which was at 14,403, actually it was 14,367, that drives where our next for the primary B wave, yep, it can stop before. So I could include maybe 0.786, et cetera, which it might be, let's just throw it in there to see what it would represent, what level it represents. And I'm going to put it here and I'm going to call it 0.786, 0.786. And I will not leave it in the magenta color. I am going to put it in this red color. And so here we have it, and we've already surpassed that. And that was at, no, we haven't surpassed it. I take that back. That's 15,428. So I'm going to open this back up. So we still have some before we would reach that 100% level. So in other words, where can wave be? Wave B, I continue to include the irregular section of it. So if indeed that, I could add one more. So let me just go ahead and fill that in as well, 1.236. If the market were going to actually go into an irregular B wave, That suggests that it goes above the high or the starting point of wave A, which is 16,767. That's existing all-time high. We'd be looking for this market to kind of cruise and move to a new all-time high. Well, then we start looking at those fib relationships, and the first one being 1.236, which is 18,250. These are out there. They're technical. So are they extensions? Yes, they are. They're technical, and the market is showing that, yep, we may not stop. And I'm not speaking to anything about, well, it's a new bull market, it's new this. That's not my point. My point, I'm going to stick to the technicals, and my technicals tell me that we're still within a primary B wave, which is a counter trend rally. That doesn't mean that I'm not participating on the long side here, folks. I want to be very, very clear. It doesn't mean you just continue to short into this, because when the market has the potential and the possibility of continuing to rise, you don't just continue to carry a short. You don't stand on the sidelines anymore. If you're a trader, then you need to participate. What can happen, sudden turns, sudden drops, sudden rallies. That's been a part since we broke above 13,068, 568. We've started to just thrust higher. And then we've had strong declines back down, 400 or 500 point declines, and then they rally it right back up again. So all of this continues to exist, and we need to be careful about how we're going to choose to trade. So back out of that weekly. So those numbers still exist. And so I cannot discount the probability. It's out there and technically possible, but the market's going to tell us. I can't tell the market. So what can we continue to look for? Well, first of all, tomorrow we have this, I believe it's CPI tomorrow and PPI on Wednesday. Let me just double check. So we have on Tuesday, we have consumer price index, and then the core CPI, and year over year we have all the CPIs. And on Wednesday, we have the producer PPI. And then also on Wednesday, we also have the Fed. So we've got a lot going on this week. And for whatever reason, they're coming in and they're just continuing to buy, possibly in preparation for what they see happening. And it's getting pretty strong that the market's interpretation is the Fed will pause. So how do they want to play that? Well, obviously, they're letting us know they intend to buy it. But many things can happen in between. They could buy it. The Fed could pause and at the same time come out and start making a whole bunch of hawkish statements in the press conference. So the initial reaction might be beeline to the upside and then beeline back down, because the Fed is determining, it's like we're waiting for additional information, because the Fed knows that the Treasury needs to start putting together auctions. They need to start auctioning off and putting and to, have the money to pay the bills. It's got to come from somewhere. So we've not really been having to deal with yet what the anticipated liquidity drain may or may not be. And we still have a lot of things out on the table that the market needs to tie up and put together before we're going to get into what could be our next longer term move. Also, technically within all of this, we have a very, very dependable 4-year cycle, which has been in its up phase. Doesn't mean it can't stop. Doesn't mean that we might not have it come in early and peak and turn. And so, we had the same situation going into 2006. We had a 4-year cycle come into bottom, and it produced a very strong rally again, and then we crashed. We went into the great financial collapse before that cycle actually turned. Who knows what can happen? These are things that are still out there, but what is continuing to support our market at the moment. So again, for tomorrow, I'm looking for the completion of the minute fifth wave and the turn lower in a minor fourth wave. What's going to produce it? Your guess is as good as mine, but it's what I'm looking for. And then once we do get a top, we can put in the fibs to determine, well, what could that fourth wave look like? Well, I'm going to tell you right off the bat, when I have to go and put this all in for this entire third wave, which is going to be from here to wherever this ends, it's going to be quite the move. We're talking about going from 12,802 up to wherever this stops. That's like 1 3/4, 1,700 some odd points, almost 3,000. That's a lot. And to consider what it's 2,000, let's say it's 2,500 or 2,200. That's a lot to think about. And a 40% retracement, instead of just coming back to the fourth wave of 1 lesser degree, which would be a 600-point drop. But we need to get that in before we really start to push up yet again to complete the larger pattern in progress. Okay, so our moving averages, everything continues to support the move. If I bring it down to the hourly chart, it continues to support the move. The 4, the 20, the 8, they're all pointing very sharply higher. Even the 50s now catching some fire. And the 200s want to, but they're a little bit slower. But the balance is continuing to point higher. What makes it more difficult, by the way, when you're day trading, is it's not pulling back. So it makes it more difficult that you want to buy into this because a sudden turn can just come. It could come. And when you're trading, you don't need to put something on looking for you're going to make $300 or $400 or $500, and the next thing you know, you're down $1,000, $1,200, $1,500, $2,000 as it makes this quick turn down. So it does present its challenges as well. So I think we still have continued upside now. The 100% level for minute 5, that's the most common equalities, 15,101. So we're going to see we got from here, but it could stop. It could stop and we can turn, but that would be the 100% level. And we're in between it right now. So it could be done. And then we get a 3, and then we put that 4 in. We shall see. Now, over in the S&P, it's even a more interesting story because it is now, see that's blow off for sure, but it took out the triangle pattern. Sorry to say, it has taken out the triangle pattern. And so now what we've got to go is just a normal 1, 2, 3, 4, and we're in a small, well, it's just a large fifth wave, but a fifth wave to finish minute 3. So the triangle got broken apart today. Now, if I open this up a little bit more, there's a couple, it's just been a difficult market to pinpoint exactly what are the intents and what's going on. We've had a lot of adjustments. We've had a lot of news. We've had a lot of different things come at the market. It reacts and then decides to continue to move in a particular direction. A lot of that has felt like it's just off base. But nonetheless, this is kind of what we're dealing with. And it's, again, the market that's going to tell us. I cannot, or we cannot tell the market, you need to do this. And so therefore, that's why I will not say, I guarantee that this is what it's going to do. I can't. And those that say that they can, please don't bring it to the trade. Don't bring it to the comment section because you can't guarantee anything. The market can't guarantee anything. I can't see how anybody else thinks they can. So here's our best estimates of what's coming through. So now, if we're in this minuet wave 5 to complete this third, well, 0.618 for the fifth wave when comparing it to the first, right? So here we have in the minute and in the minuet level, a minuet 5, the 0.618 is 43.88, and we've now surpassed it. It truly wants to hit 4,400, but before that, we have 70.5, which again, in the S&P, I continue to use it as it is the old SPX market makers. So it's one that they've always used in the S&P. I'm continuing to just display it. That's right about that 4,400 level. Now, most common fifth to the first, the 100% level, which is at 44.37. But before we get there, we've got some other numbers. We have the whole minute degree would be 1.618 of wave one, right? Pretty much also common at 44.27. So we have 44.22, and that's the 70.5 for the B wave. So we're now getting close. We're getting close to reaching very high levels where we're going to be looking at that 4,800. So again, that would be, again, that the 70.5 is for the B wave. I just got to move this out so we can see it. The 70.5 is actually for the B wave. And then the 100% is for the third wave. And then we have 1.618 for the fifth wave. So at 45.16, 44.54, 37.23. So from 4,000 all the way up to 44.54, we have a pretty strong cluster of resistance. And hopefully that'll be enough to complete this minute third, set us up again for a fourth wave. And I know it's been a tough road, and it has not been easy to count, and it has not been easy. It's not been as more difficult. It's not as hard as you think to trade, because you just have to follow the price action. But again, I just want to tell people, it's like you keep waiting to short it because you're looking for downside, and the downside's not coming yet. I don't know what to say other than try to be flexible, because we need to be participating, because there are upside trades. Even if they're just for the day, even if they're just swing trades, they are existing. So in any case, I would be expecting a little bit more upside. But again, here we have the deal. Tomorrow's CPI, Wednesday's PPI, and the Fed. A lot of things can happen. And they could be quick, and they could be sudden. And then maybe we start rallying again. I don't know. We'll have to wait and see. But that's where I'm going to end it for today. And again, I'm just going to stress, it has not been an easy market to count and to keep a hold of, to try to determine. And so we'll see if that doesn't clear up a little bit, and we'll just continue to move forward. That's it for today. The next update will be on Tuesday, June the 13th.